All right. So first of all, thank you for
Horacio.
Rise. All right. Can you hear me over there? Okay. So first of all, thank you to the foundation for having me here. It's a pleasure to be able to talk here, and I want to personally thank my friend and colleague Horacio. Where are you, Jose?
Outside right now.
No? Okay. Okay, don't tell him that I appreciate that. No, really, I'm proud because I met Jose in 2017. I was a theorist of the blockchain, and he was way ahead of me. He was a miner at that time, and he taught me a lot of things. The technical things, he helped me to set up my first Ledger wallet. So he taught me a lot. So I appreciate that I'm currently here today with him. Don't tell him that. I think all that. I don't know really how I convinced the foundation to talk lawyers from 1 hour, but I did. I don't know. The thing here is I don't want that to be a pure technical regulatory. Oh, yeah, in this one. I don't want to, I'm joking. I don't want to be a pure technical regulatory talk because it's very dense at the end of the day. We are going to talk about issuing tokens in the European Union, about stable coins, with the so-called electronic money tokens, such as USDC. We are going to talk about decentralized autonomous organization. So I want this to be a conversation, okay? Rather than me talking lawyers for 1 hour. The idea is to talk and give you some tips, tricks, general feature, key characteristic, all that kind of things, for you to understand the general regulation across the European Union, and be able to have some knowledge at the end of the day in relation to that topics. So first of all, before starting, how many of you have ever thought about issuing a token? I know at least 1 or 2 or 3 because
Pointing at me.
because as far as I know, Shahal has a token. So you ever thought about that? You? You again? Have you ever issued your own token? You have your own token?
Yes.
Okay. At a European Union level? Okay. When do you launch?
I already launched it many years ago.
Okay. And how did you assess how to launch your token, or you just last launched the token and see what happened?
It was for testing, and now it's on there, and people actually set trust lines to it, where that wasn't what I meant to do.
Okay. Are you now reassessing your token just to see whether it fits in one of the new regulations categories or buckets?
No, I buried my head in the sand.
All right. Okay, cool. Any other person around there that ever thought about issuing a token? You? Tell me a bit.
I've issued the tokens on the XRP ledger.
Okay.
It's just mainly for testing purposes.
Okay, for testing.
Obviously, if I did it on testnet, there wouldn't be the participation I've actually got there.
Okay, just like for governance purposes, like participate votes in everything, or
It's effectively a utility token, and
utility.
it's like a payment channel to get onto the service.
Yeah, that's good. That's a good word. In fact, the new regulation has a specific category called utility token. I will talk about that in a bit. Any of you engaged or related to any decentralized organization, autonomous organization, any DAOs? No one is involved in DAOs? I heard that some of you thought about creating a DAO
Yeah.
a couple of days ago.
Yes.
Yes.
No, not me.
No, not you. No, it wasn't you. It wasn't you. It was the Australian guy. We were talking about DAOs in the at the dinner the first day. But anyway, we'll talk about that. You can stop me at any time, make questions. This is a bit dense. This is even denser than the gravity sometimes because it is law, it is regulation. But at the end of the day, if you want to transact at a European Union level and even worldwide, you need a basic knowledge, and you need the law, and you need lawyers, unfortunately. And we lawyers don't want you to go to jail at the end of the day. And there is a very basic reason, is that when you are in jail, you are not able to pay the bills. So we want you to pay the bills, okay? So this is a win-win for everyone. All right, guys. So these are the topics, as I said, token issuance at the European Union level, electronic money tokens as well at the European Union level. This is very relevant. I want to generate some discussion, comparing electronic money token versus traditional bank deposits, okay? Because there are different characteristics in every one of them. And, electronic money tokens, they have some limitations in comparison with traditional deposits. I want you to discuss with me about that, what you think. I want to know what you think about that. And finally, some general comment about decentralized autonomous organization. What are the key characteristics that makes a decentralized autonomous organization truly decentralized? Because as far as I know, there are very few truly decentralized autonomous organizations. And the more centralized you are, the more risk you are betting on to be able to be regulated for one regulation or another. So the more centralized you are, the more regulations applies to you. The more centralized you are creating a certain type of service, issuing a certain type of token, the more regulation apply to you. So if you want to create a truly decentralized autonomous organization, I think that is very useful that for you to know or understand what are the characteristics, the features of a truly decentralized autonomous organization. All right? So let's get into it. Okay, if you want to issue a token at the European Union level, you have to take into account mainly two regulations. The one on your left is a very complex one, all right? It's the Marketing Financial Instrument Directive, which is transposed into the several states of the European Union international laws. And the other one is a specific for crypto assets, which is newly. It came in force in mid-2024. Okay, it was drafted before. And it's MiCA, which is the Marketing Crypto Asset Regulation, all right? Is the one specifically designed to crypto assets, by whether your crypto asset fits into one of the categories, okay? So if you take into account the MiFID, which is the Financial Instrument Directive, the regulation covers instruments like shares, bonds, derivatives, units in collective investment that I will explain a bit more about that in a bit. A token may qualify such a financial instrument if it confers certain type of rights. We will talk about that too. There's some example we share with dividends rights, bonds. We are all familiar with that, and if not, raise your hand, and we will we'll clarify anything. In comparison with the MiCA regulation with the marketing crypto assets, that one confers rights to, but not the same rights, okay? There's not profit, there is no governance decision in relation to how you govern a company, powerful voting, etc. And includes some type of a specific crypto asset. You have utility tokens within the MiCA, you have asset reference token that I will explain more about the characteristic that makes each and every one of them unique. You have electronic money token, and you have another crypto assets that doesn't fit into that kind of buckets, such as Bitcoin or Ethereum, that are free-floating assets, and some of them were used a long time ago. Okay. All right. Let's continue.
Can I ask a question right here?
Yeah.
When you said issued a long time ago, so is there some kind of a grandfather date?
No, the grandfathering is not based on when did you issue your token. The grandfathering is based, first of all, it is related to crypto asset service provider more than token issuance. But if you are a known entity, you have a foundation, for instance, or a company, for instance, and you issue a token back ago, and your token fits into one of these buckets, you have to regularize your token to be able to comply with the regulation. So it's not that you are exempt to comply with the regulation because you issued your token a long time ago.
Okay, thanks.
Okay. No one? All right. So the marketing crypto asset regulation has a very powerful and clear definition. When I say clear, I say more than generic definition of what is a crypto asset, which is basically a digital representation of value or of a right that is able to be transferred electronically or stored electronically using distributed ledger technology. As you can see here, is like a very broad definition. The idea is to capture as much crypto assets as possible, on of course with its own characteristics. So it includes a lot of them: payment tools, governance token, utility token, etc. And yeah, as I said, the definition focus on ability to store and distribute electronically rights. Things that you have to take into account if you want to issue a token at a European Union level, okay? Governance right, the profit expectation, and the total rights assessment. So when talking about governance right, it's not that, when you think about governance, you think of decentralized autonomous organization, or you think about tokens such as Uniswap or Aave, or that kind of tokens that have DAOs that are backing them, and they take decision based on the voting rights, etc. The governance embedded in a token do not automatically trigger one regulation of the other. You have to assess on a case-by-case basis, all right? Same for the profit expectation. Profit expectation does not automatically trigger that you are facing a financial instrument. It depends on the profit or depends on the right, okay? As you all know, for instance, when you issue a token for people to participate in your network, you have to give them incentive, okay? Give them incentives does not automatically qualify as a profit, as a give them a profit, okay? Case by case basis. Reality is very complex and it's full of nuances and details, all right? So the total rights assessment, this is basically a summary of what you just said. I have just said, sorry. Okay, comparison, first comparison of all. I have prepared, after that slide, I have prepared some checklist just for you to be able to see what are the futures or different type of financial instrument, what are the rights, and being able to discard or embed or include your kind of future token into certain categories. I think that he wants to say goodbye. And we can see that I will share with you the slide and the presentation just for you to get that kind of checklist because I think they are very useful because they break down the features and characteristics. And you can think of your own token, for instance, this how token, and see whether the token complies with certain features or characteristics that make the token fit into certain backend and risking applicable regulation or other type of applicable regulations. So I oppose this one because most of the tokens in circulation currently are utility tokens, all right? There are very few that are stable coins or electronic money tokens or asset reference tokens. And there are very few financial instruments. The real world asset is a new category and it doesn't have as much penetration as it have utility token, okay? So that's the main reason I oppose those two. So the idea of that comparison is for you to see what gives you a utility token and what gives you a financial instrument, okay? So we talk about ownership rights here, different types, SEP, bonds, derivatives, units of collective investments. The type of rights that they grant, profit, voting in a company, whether you appointed a director or not, whether you decide to merge your company with one another or separate, or dilution or close your company. And a couple of examples, the shares that grants dividends or capital returns, and typical utility token with protocol governance rights, the Uniswap token, for instance. And probably there's a HOW token, if I'm not mistaken.
I have a question here. Sorry if you're going to cover it later, but what is an NFT in this?
I have a specific checklist to address how an NFT fits into one category or another. And my main idea is to get Hosian, remember my words, don't tell him, to get Hosian and basically interrogate him about his NFT collection. That's the idea, and see and assess whether his NFT collections comply with the law, okay? And if not, call the police and then.
So just to be clear, are we going to be blurring faces here?
All right, let's continue. This is more of the same, okay? Technical governance as opposed to corporate governance, okay? Remember that kind of the Uniswap token, conferring rights to be able to, modify futures on the blockchain and all that. No ownership of fiduciary duties, like I don't have to give you a profit because this is not a share, it's not a bond, it's not that kind of financial instruments. And the financial instrument exclusion, of course. Okay, so let us start with the checklist. I'm going to give you 4 type of checklist to be able to assess whether your token, your potential token, or one of your friends' tokens fits into that kind of financial instruments categories, all right? I mean, this is not legal advice, of course, this is just educational, but as a tip, I would say, try to avoid this regulation as much as possible, okay? Try your token not to fit it in any of the first categories, because it's very complex, it's very dense. You need capital, you need prudential requirements, unless, of course, you want to issue that kind of financial instrument on purpose, which is, there is a possibility, of course. It's people that want to, there's people that want to, tokenize real world assets. There's no problem with that. It's completely legit, but they have deep pockets, as far as I'm concerned. I don't have them yet. Let's see after the Horacio assessment. All right, so you have this checklist, okay? The idea is for you to imagine a token, okay? So let's make the assessment. Is your token giving you dividends or profit rights, like I said? Yes or no? Does your token give the repayment rights with interest, like a bond? Does your token allow us voting on business or profit matters? So we merge, so we separate the company, so we appoint a new director, so we dissolve the board. Is your token freely transferable, traded in the market or on a peer-to-peer basis? Yes or no? This is what is called is trading in the capital markets. Does the token belong to a fungible class? All fungible, what it means. What is an example of fungible? What is the most fungible thing in the world? You are carrying that in your pocket. Cash. Yeah. Is the token primarily used as a means of payment or not? So depending on what are your answers to this question, if you click 4+ boxes, your token qualifies as a transferable security. So now you have a problem, basically, and you need to call me, of course. So another ones, money market instruments. Probably you are not familiar with the name or with the term money market instrument, but you are familiar with bonds, treasury bills, commercial paper, all of that, right? You heard that before? You heard that USDC its collateral is treasuries, short-term treasuries, most of them, yeah? So another checklist. Has your token short maturity, less than 1 year? Does your token represent a repayable debt with a fixed return? Is negotiable and transferable? So is the token used for short-term financing, such as corporate debt? When you are a medium corporation and you need some cash, there is a form to finance you, which is basically issue corporate debt. There's another thing that you can give equity to a venture capitalist and lose your company. That is another one.
Question. Why the... Why the short maturity on that? Because a lot of corporate bonds and government bonds, for that matter, most money market instruments as they exist right now are typically greater duration than 1 year, are they not?
You mean that it's rare to use a corporate bond?
Yeah, for like 8 months or something like that.
I mean, depends on your capital needs. So, for instance, did you know all this Santander Bank?
Uh-huh.
Yeah, so they issue debt, year after year, with 6 to 12 months maturity, because they need capital needs, they need financing for the year. So they need imagine, I have cash reserves, 100, but I want to launch new branches, new companies, new lines of business, and I need another 100. What do? I issue a corporate bonds in 1 year because I calculate in advance that at the end of the year, I will triple my cash reserves.
And also, how do they define short-term financing? So how is point number?
I mean, this is not like the usual instrument a small, medium company uses. This is more, like big companies, and it's quite easy because the only thing that you have to do, if you are not a bank, because that's involved in investment banking, it's called your investment banking, and they contact with potential investors, and your debt in 2 days is financed. It works pretty easily in that kind of corporate world where you are moving a lot of money and you are promising higher returns.
Okay.
Yeah.
Thanks.
It's pretty standard in a sense, as much as your company is doing well, it has capital. You keep getting warranties that you are going to repay, but companies that are they've been in the business for long years. It's pretty easy to go to the capital markets and raise capital, because they have a lot of liabilities, a lot of debts, a lot of corporate bonds issued already. So yeah. So a company, for instance, could issue a crypto token to raise 6-month loan, just to repay whatever, or start a new business line, etc., and then repays after the year or after 6 months. That's an example. Okay, let's continue with the financial instrument. So we have seen transferable securities, shares, bonds. We have seen money market instruments, corporate debt, treasuries. And now we have the collective investment units. Has any of you ever invested in anything beyond crypto? Do you have investment? Yeah. 1, 2, 3. What type of investment do you have beyond crypto?
Just index funds typically.
Index funds?
Or real estate.
Stocks?
REITs, stocks, ETFs.
All right. Okay. For the same. All right. Have you ever invested in a hedge fund or something similar? And when you invest in one of those ETFs, do they give you a price? Okay, you have a price, like a price per action, right? And the ETF invests in a number of companies or commodities or whatever. So that is a unit of collective investment, okay, that kind of instrument. So it's kind of a people, such as us, pool capital into one pool, see the redundancy, and then someone else, a third party, manage the funds, and you, us, do not have any type of influence in how they manage the capital. That is known as a unit of collective investment. They have the characteristic. Does your token represent pool investment for multiple investors? Yes or no? Does your token or assets are managed by someone else? The one that is managing your ETF or your index fund. Not you personally, but another third party. Has investor a day-to-day control over how you manage the assets? Yes or no? Most of them you're not, because otherwise you will be a hedge fund manager. Are the investors expecting a pool return over the asset that invest? Yes or no? So is the token value linked to the value of the underlying pool? So your token or the result of the kind of units of collective investment that you bought is giving you a price, and taking into account the underlying, you can do better or you can do worse, right? So if your token complies with that kind of future, you are, for pool boxes tick, you are facing a collective investment unit, okay, which is a financial instrument, which again, we have to run away from that. Have any of you know Index Group? No? It's full crypto. They have a decentralized autonomous organization. They are doing that, although they are not published at a unit of collective investment, just pool assets. You can take a look at the website, indexgroup.com, and you can see like different buckets with different assets, but they don't call them, units in collective investment. But it's pretty clear because they comply with all of them. Pool investment from multiple investors, management someone else, the investor have no day-to-day control over the assets, expect a whole return, etc. But they don't call it that.
Doesn't any chain-issued AMM pool token qualify?
It depends.
Or is there just nobody to blame?
Yeah. No, and I say it depends because automated market makers can qualify in two things. The token can qualify or could qualify as such if they started the pool, if they gather different crypto assets from different investors and they are managing the pool. Yes, they could qualify, of course. They could qualify also as crypto asset service provider, providing transfer of crypto assets or exchange of crypto assets for crypto assets. So it depends. Depends on the detail and how they function, how the smart contract works.
The question is who is actually issuing the AMM tokens? It's the technology issuing the tokens, but it's a pooled investment in a way.
Yeah, most of them probably fits into that category.
Yeah.
I don't know most of them, I didn't study all of them very deep, but probably if they comply with these characteristics, depending on how the smart contract works, probably they fit. Yeah.
Yeah, but who's they then? But who's they?
Who's they? The different automatic market makers. I don't know any of them. I know just some.
The people participating in the this is
What about the
interesting.
participants in the AMM?
The partners,
The participants, the people who are taking part in
the investors.
The investors, yeah.
the investors who are taking part in that AMM.
Yeah. What about them?
How are they treated? Are they open to any?
No, because as far as I know, no automated market maker is qualifying themselves as collective investment units. Therefore, they are not regulated. Therefore, they are unregulated. Therefore, they are not providing the rights that they had to provide to the investors.
Okay.
So what will happen? Could one investor just go to the regulator and say, look, my automated market maker is doing that without regulation? Yes, you could. Yes.
Okay.
Is it going to take a lot? It depends on who is behind that, who is behind the AMM. Depends if it's a DAO, if it's a company, identified company. Depends on whether you can follow the voting rights, the token, etc. But yeah, you could go to a regulator, of course.
Would core devs? Sorry. Would core devs ever get blamed?
What?
Like core blockchain devs, it's like David Schwartz. You develop the code. It's your responsibility. The developers of the XRP ledger, for example.
If they create an AMM, if they could be responsible, you mean?
Well, I mean, if
you have to assess on a case-by-case basis, and main countries take into account whether they are profiting from that or not. But yeah, it's an interesting topic.
I don't know if you're covering it later, but what about platforms where tokens are traded?
Yes.
And they take a fee from the trades. What do they come in?
So you mean when you issue a token, but you want your token to be tradable, and you go to a platform and the platform publish your token to be tradable?
Yes, and take a percentage of every trade?
Yeah, they will be qualified as crypto asset service provider. Mm-hmm. Depending on the service they are providing, that would be considered placement of crypto assets. When you take another one asset, or the publisher is different from the issuer, and you get that asset into your platform, and you give them to your users for them to buy, trade it, or exchange it. But yeah, it's the same regulation, it's MiCA regulation, depending on your token, on how they qualify, whether they are outside the Marketing Financial Instruments Directive. But one partner would be the issuer, which would be you, the Sahel Foundation, for instance, and the other one would be the crypto asset service provider.
No, I'm actually talking about something, these things which have become rages, like meme coins and all of that. Right?
Yes.
Which are traded on. Yeah. So, but they're taking, is it?
It's an interface that allows you to issue tokens and trade these tokens, and it gets some fees for helping you in every transaction you make of this kind.
Yes, that would be the placement of the crypto assets. And at the end of the day, the crypto asset service provider get their profits from charging you a fee, charging the issuer a fee, charging the one that is trading a fee. The brokerage business works like that. So they have to be able to make profits for moving in and out assets at the end of the day. So yeah, it's completely legal, but you have to be regulated as a broker custodian, or as an exchange, or as an operator of a trading platform.
And also about responsibility. What about the responsibility of validators, miners, stakers, so people who take part in consensus algorithm and enable actually these transactions happening?
Yeah. Fortunately, the marketing crypto asset regulators leaves that kind of actors outside of the regulation. Okay, as long European Union, yes. Yeah, of course. This a general a statement. Of course, you have to assess if the validator is performing, anything beyond validates. Okay, but yeah, at the end of the day, normally you have to assess on a case-by-case basis. You cannot make general statements, as I did. You can make that, but it's like if your typical validator node is doing what it have to do, it's say MiCA. But if it's doing anything else, which I don't know because I didn't assess the specific validator or miner, we will have to get the conclusion on whether MiCA applies to them or not. On the first instance, they are outside the regulation.
I have a question for you. So if you have a platform that is providing a service and taking a fee, and they are LLC'd in the US.
Yes.
But they're trading worldwide.
Yes.
Do they fall under MiCA regulation?
There is one thing that is called addressable market. Is your LLC from the USA actively targeting European customers? If the answer is yes, you have to comply with MiCA. But we have another trick.
So it's actually a fine balance, right?
No, I'm joking. I mean, there's another thing, another concept, which is called reverse solicitation, all right? Which basically says, if you have your LLC in the United States and a customer in the European Union goes to you without you actively targeting him or her, that it could consider outside of the MiCA application because the solicitation lies on the European customer. Is the European customer the one that went to that specific trading platform or crypto asset service provider and request the services? But of course, that is complex to assess. Certain companies have relied on the reverse solicitation regime for years just to avoid regulation worldwide. But you cannot do that anymore because it's very difficult to qualify and to prove that you are really relying on reverse solicitation regimes and you are not actively targeting, because actively targeting, take into account, I was dealing with the Dutch regulator months ago, and this is public, you can see that on the Dutch regulator.
You know this is being recorded, right?
Yeah. I'm aware. And you can see that in the Dutch regulator webpage. Coinbase, Binance, Crypto.com, all been accused of providing services in the Netherlands without complying with the regulation, without register. Okay, before MiCA, it was a pretty easy register, just AML, anti-money laundering register, a couple of things, just a paper, a couple of forms, etc. Pretty easy, and none of them comply with the regulation, including Kraken. So why? We justified that we were relying on reverse solicitation. And the Dutch regulator said, look, the only fact that you publish an app in Google Store or Apple Store for the Dutch market, it can be considered that you are actively targeting European customers. That one minor thing. if your web page is in Dutch, you are targeting Dutch customers, all right?
So only English, then that's fine.
Sorry?
If your website is only in English, then
you could be targeting customers in Malta.
Yeah, okay.
Or Ireland.
Yeah, I mean, so my question
English
is like
considered like a neutral language.
Yeah, I mean, let's say.
Are you thinking about providing services in the European Union?
Sorry?
Can I give you my card?
My question is like, if you want to secretly target like European customers,
do not
no. No, I mean, just theoretically, right?
Could you repeat your question?
Theoretically, right? And then you found your company in like Panama or like British Virgin Island, right?
Mm-hmm.
And then if your website, let's say your DApp is like just a website, right? And then it's in English only. Does that mean it's actively targeting like European customers as well? Like, are there like still ways to circumvent
the question
it?
would be, beyond merely having your website in English, are you doing something else?
Just
for
provide
you
services.
to onboard European customers?
Sorry?
Are you doing something else beyond just having your website in English just to be able to onboard European customers?
No, it's just like providing services to anyone.
All right. So
Yeah.
I mean, the application of the law, I mean, you would be abide. You wouldn't have to comply with the European regulation. I mean, at the end of the day, it's based on jurisdictions. So if you are targeting people from that jurisdiction, you have to comply the laws of the territory.
So don't show users balances in their own local currency.
Oh yes, yes, yes.
But it would be kind of weird if you just have your website in English and you are onboarding month after month 10,000, 20,000 European customer, 100,000, 1 million. It would be pretty weird that everyone from the European Union is actively just requesting your services. You know, that kind of threshold things, nuances that you have to take into account. Because that would mean that you are actively targeting, of course. You cannot reach that kind of threshold without actively targeting, because no one will know you. How a European customer can know about, you know, Cayman-based company.
So it would also include if you do sponsored posts on X or Facebook or something like that?
Yes.
Or if you attend blockchain conferences and put your...
That's one. So, that's one. This is probably the less, but this is one. Yeah. If you attend, for instance, with your Cayman broker or company, if you attend European blockchains events, that could be considered targeting.
Yeah.
Okay. So, I mean, it's hard to prove at the end of the day, because how you prove that, you know, some of your company directors fly to Europe and they make some contacts at a B2B level.
I'm talking more things that this is something which everybody wants to take part in these conferences. So they take a booth, they put banners and things like that. So that's something to be aware that you may need regulation.
Yeah, specifically the regulation said, regulation guidelines, different court rules, etc. They specifically say that attending conferences is considered targeting actively to users. Although this is the less, this is the less relevant of the targetings, objectives, of goals. If you take into account, publishing in a language, publishing ads or paying for ads in some social media, etc. This one is the less, relevant of them.
So, do we then, I guess the lines get blurred, or are we drawing a line in the sand that Twitter is actually marketing for targeting?
Yes. Look, Twitter have an options. You can target certain jurisdictions specifically. So Twitter gives you the option that, for instance, let's take into account that I want to target within the European Union just 2 countries, Spain and Estonia. You have that option. So if you take that option, you are actively targeting those countries, and you need the license. You can like, depending on the type of advertisement you are publishing. but you can customize that. Be able to avoid that kind of things. For instance, sometimes crypto asset service provider has several accounts. You have a general account from your HQ, for instance, in the United States, and you have local accounts. Coinbase Spain, Coinbase Romania, Coinbase Ireland. And depending on how you publish, you can publish general announcement or general promotions from your HQ account, the general one, and that could be outside of the regulation, or you can publish in your local ones. But always depending on who are targeting. If you are publishing from your USA account, but you are targeting specifically European customer, you are in, because you are trying to avoid regulation by publishing from your HQ account. Okay?
Okay, thank you.
For advertising, or is that also
for everything?
Even if you're just making a post?
I mean, depending on, are you trying to promote your services with a post? Or is it just...
Without an ad.
Yes, so you are trying to actively target customers with your post.
Yeah, I mean, actively, you're basically talking about, okay, now, we have these licenses in the European Union, or, we look forward to European Union. Come join us in this festival in European Union. How is that? You've seen the typical posts.
Yeah, that could be considered actively targeting European customer.
Okay, so it's not just advertising.
But take into account one thing here. I'm not saying that is 0 or 1, black or white. There are always at the end of the day, it's a matter of risk reward. Okay, you assess your risk, you assess your reward, you take one step further, or move ahead, or move on. I mean, all the crypto asset service providers are doing that. So, sometimes it's worth take the risk, because maybe the regulation could be a little bit more clear, or you not consider you are actively targeting European customers to organize an event just for people to meet and talk about general, technology, etc. You're not trying to promote a certain service, but this is more like the core of the event is trying to promote, people encounters and talk about the technology. There are nuances, okay?
We're talking a lot about the European Union. In the United States, a post on Twitter is generally solicitation. It's generally considered that way. So for everyone in here, just, you posting about your fund or token or thing is generally a solicitation, which
even if you are posting from Singapore.
What's that?
Even if you are posting from Singapore.
Right. But from the SEC, yeah. If you're targeting United States customers, a post on Twitter is
of course. If you are targeting US customers, it's the same as if you are targeting European customers.
Sure. Yeah. It's just sort of a general statement is that your post on Twitter, your post on Facebook, bringing them to you is solicitation. The only way to file a Form D in the US, private placement, is by not posting at all. Marketing materials in general are considered solicitation.
I drafted some marketing guidelines. This is changing, by the way. It's not as it used to be. The US is developing now the crypto regulations, fortunately, for the US customers. I mean, at the end of the day, there's a general rule. As long as you are actively targeting certain regions you are in, the regulation have to apply, but I think it's kind of logical sometimes. Of course, gray lines is not 0 or 1, but if you are actively targeting customers because you as a company really want to onboard that kind of customer, and it's on you. You have to comply. It's plain. You want to play with the grown-ups, you have to comply with the regulation. That's it. You are not a teenager anymore. So if you want to do business, the regulation applies, the game. That's it.
Sure. Another question might change it a little bit, but you said the landscape is sort of changing. Do you see more companies creating like actual financial instruments on these chains? I mean, we've been around for almost a decade now, and we sort of saw those ideas at the beginning, 2016 and stuff. We've never actually seen them yet for a large scale. I'm just interested. Do you think companies like if I created a new LLC today, do you think companies are going to issue these shares on the chain and pay dividends on chain and voting rights and et cetera? Do you think that'll happen?
and this is a personal opinion. I cannot foresee the future, of course. But from what I can see nowadays, taking into account the current events, such as crypto companies acquiring traditional brokerage businesses. Kraken made an acquisition of 1.2 billion like 1 month ago. Coinbase is doing the same. But the banks are doing quite the opposite. The banks are acquiring exchanges. So there's kind of a convergence where all the players want to have like one super app providing all your services related to money. So if you have your money in my account or in my services, you can go and do all these services. So yeah, I think that crypto companies are trying to put go a bit off chain and like go or commit for the traditional world, bonds, stocks, etc. But I think at the same time, traditional finance companies are doing the opposite, and the idea is to converge in one center and be able to offer every services related to finance to one user. Why? Because you don't want your user to go outside of your platform and go looking for someone else's services. You want your users to have all the services in your platform. It's the same as Facebook. Facebook, Instagram, TikTok doesn't want you to get out of the network. That's the main reason they are giving you constantly, the videos you love, targeting with ads, etc. This is more or less the same, but related to financial services. A player, the only thing that wants is for you to be able to, your whole financial life in just one app. Your loans, your mortgage, your actions, your trade, your stock, your crypto, your real world asset, everything. And they are all doing the effort at the same time. They are competing for the same things. But the starting point is different in the sense of, banks know the business because they've been long ago playing it, but they have legacy systems, which is kind of a stopper. Crypto companies start fresh from scratch. Crypto companies, fintechs, etc. Look, Revolut. Revolut started as a fintech company, and now they have crypto companies, crypto services. They are using a lot of stable coins. So fintechs, crypto assets, companies or service providers, etc., started fresh with no legacy system, with a very technological stack of components. But the thing is, they don't have that kind of knowledge from the traditional world. And what they are doing to be able to cover that kind of lack of knowledge, they are buying people from the traditional finance and bringing them in. So at the end of the day, is the thing that we are experimenting nowadays is like convergence into one single service, just to be able to offer everything at once.
I'll speak loud till Jose comes with running with his mind. I think,
to add, or maybe to what Dennis's question is, so do we see companies themselves, say small companies, medium-sized companies, going and issuing their shares or tokens on chain themselves? Do you see that happening? Because we've been talking about tokenization of real world assets, and it's been going round and round, and it's always, when is it coming? Tomorrow. It's always, every day is tomorrow. So what do you think?
I mean, what I'm currently seeing, more than tokenized stocks, that they will come for sure, is tokenized treasuries, tokenized money market funds, tokenized treasuries, bonds, etc. But the stocks are coming next. So the idea is to be able, what they want is have the option to move every store of value fast and 24/7. You cannot do that with the legacy system. So what is the solution? Just put them on chain and start to move them around 24/7, fast settlement, instant settlement of not only cash, but stocks, bonds, all the financial instruments. You need settlement too. When you trade a stock, when you sell it and when you buy it, you are paying with cash. You need a cash settlement leg. So I think that the idea is to tokenize as much as possible, just to be able to use the technology to move every asset 24/7 instantly. Any more? What time is it?
Almost.
Really?
No.
All right. Okay. So now as the I think this is the last, as the last category of financial instrument, we have derivative contracts. How many of you have ever traded futures, derivatives, or anything? Okay. How many of you know what they were doing exactly? With the leverage, what was the the underlying asset? What were the consequences? How does it work basically? Because when I did it, I trade futures and I play with leverage, but I didn't know what I was doing. I mean, not at a deal level. I mean, I was basic knowledge, but the more, I didn't trade, great quantities. I trade like big amounts, so it's $10, $12, just to experiment. But I didn't know what I was doing. The thing I'm asking that is just to understand when you are trading or experimenting with that kind of products, whether you are aware of the consequences of your actions. Because in my case, I wasn't. And it was like, just 1 second after, I lost everything. It was like, and then I started to question, how the fuck does it work? And I started to tinker and dig deeper, and it was...
You're describing every trader on blockchain.
Yeah.
So my question here is, do you think you need a gambling license for this?
Yeah, I need them. No, I don't trade with that anymore. Since I know them, I don't touch them. I'm not a day trader or anything. I'm just a hodler. Anyway, so derivative contracts, most of you are aware with that. Two types. The one that where the crypto asset is serving as the other line, for instance, for futures. Let's say I enter into a future contract of buying 1 BTC at 90K in 6 months. Sorry, in 6 months. There is an obligation, not an option, an obligation for me to pay 90K. I receive 1 BTC. If BTC is at 70K, I lose 20K. All right? But if BTC is at 110, I can sell it and gain 20, right? And the other type is crypto asset that qualifies as derivatives themselves. So for instance, the tokenization of real world assets. Okay, we have the derivative itself, which would be the stock, and then we tokenize the stock and we put the stock on chain. All right? Two types. Checklist for derivatives. Does your token reference underlying asset price index? Yes or no? Does your token represent a future or contingent right or obligation? Delivery, performance, interest, etc. Yes or no? Does your token pay off based on a price movement or something else? Yes or no? And does your token settle by delivery or cash difference? Yes or no? And what about the underlying commodities, FX, securities, etc.? If you are ticking 3 or more boxes, you are facing derivatives. And you again have to comply with MiFID, and you again have or need deep pockets. All right. So let's say that we assess with that kind of checklist our token, and fortunately, it doesn't fall under any of the financial instrument buckets, so we are happy, but not yet, not there. Now we have another regulation, which is the marketing crypto asset regulation. So let's see if our token could fit into one of these buckets, which is better than the previous one. This one is much better, but it doesn't mean that you don't have to comply with central requirements, okay? So pay attention to that. There's like a general assessment just for you to use, and another checklist for you to use. So if your token is issue or store or transfer via distributed ledger technology, probably you are under MiCA. If your token represents value or rights, probably you are under MiCA. If your token is transferable between holders, probably you are under MiCA. And if your token is not purely limited to one network or single merchant, probably you are under MiCA. So 4 plus 6, you are under MiCA. Okay, type of crypto asset that MiCA covers. So we have 4, all right? We have EMTs, the so-called electronic money tokens. We have asset reference tokens. We have utility tokens. And we have an additional bucket that doesn't cover, if your token is not falling into one of the 3 previous buckets, probably is falling into the 4th one. And you are lucky, because the 4th one is a light touch one, all right? So electronic money tokens, pegged to a single currency. What does it mean? Collateralized, referencing one single fiat currency, all right? USDC, Tether. Those are electronic money tokens in accordance with the European Union regulation, all right? So we have asset reference tokens. The same, purpose to maintain a stable value, but pegging not only to one single fiat currency, but a basket of assets. Could be multiple currencies. You can include commodities, gold, silver, etc. Utility tokens. So as I said before, most of the tokens currently under circulation falls under this bucket, all right? They normally grant access to digital goods, services, platforms. You need that for governance. You need that to incentivize your users, your nodes, your validators. Asset only by the issuer with no embedded financial rights and primarily used for non-financial purposes. And then we have the last bucket, which is all the crypto assets, which is very few crypto assets fall into this one. This crypto asset was created just to be able to feed BTC and Ethereum, basically. So most of the crypto assets currently in circulation falls into the previous 3 buckets, most of them in the utility token one. All right, more checklists. Guys, I love checklists. They're super useful. And you can use ChatGPT to make them. So, as I said, token peg 1-on-1 to a single fiat currency. Token is redeemable at par value. What does it mean? That when you pay an issuer to get some electronic money tokens, you have a claim against that issuer. What does it mean? That you have the right to get your money back every time you want. It's a claim, it's a debt, you know. The issuer have a debt against you, okay? It's not a moral debt. It's like you have the right to claim that before the courts. You can redeem the token at par value. This is important, par value, no less than the money you previously give the issuer. And it's the same for payment or value transfer. If you can think about, typical stable coins, USDC, USDT, what are they used for? Main use is payments, right? Payment or settlement, which at the end of the day is payments. But I'm thinking about settlements in the sense of you are using them just in case you trade some derivatives or some stocks or some transferable securities. And there is one leg, as I said before, that you have to use cash, or in this case, electronic money tokens, just to settle. All right. Asset reference token, more or less the same, but take into account not pegged to one single currency, multiple currencies, commodities, etc. All right. They work as the electronic money tokens. You need reserves. You need to comply with prudential requirements. Okay, so pay attention to that one. You don't want to fall into those 2 categories because they need. You need reserves. You need to comply with central regulation and prudential requirement. As a starting point, if you want to be an issuer for the electronic money tokens, you can only issue them if you are. That is important, and I forget that. If you want to use an electronic money token, you have to be an electronic money institution or a credit institution. Is anyone in the room familiar with the concept of electronic money institution? You? Why you are familiar with that?
I did some research into that a few years ago.
All right, cool. For those of you who are not familiar with the concept of electronic money institution, it's like, imagine a pyramid, and on the top you have credit institution, traditional banks. They are able to offer you loans, mortgages, deposits, bank accounts. So after that, in the pyramid, related to the regulation, you have electronic money institutions. You are not able to offer mortgages. You are not able to offer loans. You are not able to offer financial instrument. What are you able to offer? Basically, payment accounts and electronic money accounts, which is basically an instrument to be able to, transact and move money around. Okay. In some of them, depending on your license, you can do payments subject to a credit line, but most of them are used for payments. Okay, different type of payments. The acquirers, the TPVs, they are acquirers. You can issue credit cards. You can do payments internationally, of course, but this is kind of a less regulated vehicle just to be able to move money around. Okay, you cannot offer interest. The only vehicle that allows you to offer interest are the credit institution, deposit taking, offering yield.
So with that in mind, how does somebody who's not a bank, right? The lesser one, how do they make money?
The electronic money institutions. Mm-hmm. There are two forms. The first one is with fees for the payments, and the other one is with the FX. The big money is made with the FX.
So they do need so then usually they would also have an FX license.
No, there is no specific FX license. Okay. You can do FX when you request, normally unless, but I think there are very few companies that they only keep, the FX line of business. They normally combine multiple lines of business, and they really, for you just to incentivize people to make the FX, there have to be something else. How you can incentivize people to make FX? Because you have to make international transfer, and when you make international transfer, most of the time you have to make the FX. So this is why people go to payment institution, make the FX, and then make the payment. And this is how payment institutions or electronic money institutions make the big money in the FX. The FX gives a lot of money. Like, in terms of revenue, of course, depending on volumes, on whether you have more services or lines of business. But imagine that a company only does payments and FX. So probably 80% of the revenue comes from FX. FX is a very lucrative business. Okay. What time is it?
It's almost 12.
Jesus, and I have 2 more buckets left. All right. Okay, so some tips for designing your utility token. So my advice, not legal advice, educational advice, all right? My advice, if you want to design a token at a European Union level, taking into account, unless, of course, you want to risk or you have a business concept or idea that you want to give rise to that, and want to promote your electronic money token, or you want to do real world assets, etc. My suggestion is that you choose utility tokens, because they allow you to do a lot of things that you are currently, or most of the token currently does in the blockchain or at the blockchain level, without the risk or the prudential requirements or the liabilities of the rest of the financial instruments or other type of asset reference token or money tokens. Okay, so these are tips for designing your utility token. You can take a look at home or when you are bored, or you can call me and I can sing it to you.
With the bill?
I can sing that to you. I can rap that to you.
Can you make the slides available if you don't mind?
A what?
Would you be willing to make the slides available?
No, I don't understand you, sorry.
Will the slides be available to
Yes, at a price, of course.
How much? What's your wallet address?
No. It's gonna be expensive, but it's gonna be the best presentation and checklist of your life. No, I'm joking. I will share with all you the presentation. What I wanted to say. All right, the NFT test. The NFT test. So 5 things to consider to take into account and assess whether you are performing or are issuing an NFT and you are outside MiCA or you are within MiCA, all right? 5 buckets: general uniqueness criteria, indicators of uniqueness, fungibility, fractionalization, and the last one is financial instrument filter that we already checked, okay? Let's leave one out. So, Hosean, my dear friend,
go up on stage.
Please come here.
On camera.
All right, some questions. So, I'm aware that you issue a beautiful NFT collection, right? All right. I'm not sure about that. So get some question about your NFT collection. I'm pretty sure that fits into the NFT criteria, and you don't have to comply with MiCA and all the type of regulations. Okay, so your first question related to your collection. So is your token genuinely unique beyond its technical identifier? So must carry distinct characteristic or economic value?
Yes, it is.
Yes, we can think it is. Cool. Now you're saving yourself. Second question, is the token non-substitutable with any other token? Fungibility thing.
It's not.
It's unique,
yeah.
Right? All right. Does the token represent a specific item, item, or assets?
Yes.
Different warriors, different city things.
Artwork.
Right? Another one. Does the token represent something with intrinsic rarity, characteristics, power, moves,
yes.
wrapping? All right. Yes. We're doing good. Yeah, probably an NFT. So let's move to the section B, indicators of uniqueness. So does the token grant exclusive access, control, or use?
Yes, they give you
access to a game.
Access to game.
Yeah. Okay. Cool. So is the ownership exclusive of the token holder? No share rights with holders. Just for me on my own.
Yes.
Everything is for me. So that's cool. 6 questions with an NFT. Just pointing out. Section C, fungibility. Are there no other tokens offering identical rights, function, or value?
There are not.
Okay, cool. That's good. So another one. If your NFT is part of collection, which it is, as far as I'm aware, is its token materially unique in function, design, or utility, which is related to the previous one?
Yes.
Cool. So most likely we have an NFT. Let's go to the last bucket, just in case. We have to make sure, devil is in the details, as you know. So is this token not a fraction or a subdivided price of a larger NFT?
It's not.
It's not. So the last one, because it's not a financial instrument, we'll leave that outside. So if the fractional, does the token still grant a distinct right? No, because it's not fractional, right?
It's not.
So, allegedly, we have an FT. You are outside MiCA. Congratulations. Okay, guys. I have another 20 slides, but I don't want to bore you. I don't want to waste your time anymore. You can talk to me outside. The other ones, the other 2 sections were about electronic money tokens specifically. I wanted to discuss with you, electronic money token versus deposits, the inability of electronic money tokens to offer yields or interest versus deposit where you can offer interest. And then I have a last section related to decentralized autonomous organization. 5 key characteristics to take into account in case you want to create a decentralized autonomous organization and make the decentralized autonomous organization truly decentralized. The settlement layer, the operational layer, the governance layer, everything that you have to take into account to make them truly decentralized.
That's the dinner. So you can sit with him. Sound disappointment there.
All right. First thing first. So the first question that you have to ask yourself in case that you want to build a decentralized autonomous organization is why? Why someone would need a decentralized autonomous organization, okay? And that is important for some reason because a lot of the DAOs that I know, not most of them, but a lot of them, they didn't even think about whether some alternative vehicles or a structure could fit better into their goals. And I'm telling you that because most of them, if not all of them, could fit within a normal corporate structure, aka limited liability partnership, and some other type of different companies depending on the jurisdiction that you are sitting at. The thing with DAOs is that they are very tricky in terms of projects, moving parts, and the main question, why you really need a decentralized autonomous organization to operate, okay? I was talking, when we were having lunch, we were talking with some colleagues over there about whether a DAO would fit certain needs. So the first thing, if you are considering creating a DAO, the first thing that you have to think is why you need one. Do you really need a DAO? Ask yourself 5 times why you need a DAO and not a normal corporate structure. Do you really want to be truly decentralized, and decentralization, decentralized governance, etc., are at the core, at the heart of your project? If the answer is yes, and what you want to do with your DAO is truly related with the decentralization model, then go ahead and assess the different moving parts. But if not, most of the time, it's better to have a normal company, foundation, whatever structure, but not exactly DAOs, because DAOs get trickier, DAOs get complicated, and at the end of the day, you are risking sometimes trying to avoid some regulation, trying to avoid tax, trying to avoid countries and regulators. You are risking that some of them pay attention to what you are doing with your DAO, all right? DAOs doesn't work anymore as they used to, okay? Regulators are paying attention to them. There are some papers, some guidelines, at least here in the European Union, and probably MiCA, the second version of MiCA, would address some specific matters related to DAOs. So that's the main reason I'm asking why you need that one, okay? So let's say that we finally reach the conclusion that we really need a DAO because we want to go truly or fully decentralized. Decentralization is at the core of our projects, so let's move ahead. And I give you some tips, not financial advice, not legal advice, just educational purposes for you in case you want to move ahead or move on with your DAO, all right? So we have here some considerations to take into account. As I said, projects must be generally decentralized to avoid some risk. There are always risks, tax risk, regulatory risk, among some of them. Even operational risk, okay? It's not the same have one team located in 3 countries that have 7 teams located across the world, okay? All of them, are difficult to manage, and all of them carry their own challenges, all right? Entity of choice and liability. Even if we choose to proceed with a centralized autonomous organization, at some point in time, it could be considered a limited liability partnership. And one of the members of the DAO could be personally liable for some things, for some services you are providing, or for some things that happen when you are operating your DAO, okay? Take that into account because it's important. Token distribution and risk. And identity choice and liability. This is not advice, okay? It's like the most or the preferred setups include complex structures, including a Cayman foundation, for instance, plus a US entity, a holding company most of the time, plus an operational company in, I don't know, Middle East, okay? These are complex structures. You need deep pockets to design that ones, because you need lawyers, you need tax advisors, you need corporate lawyers too. So these are difficult, but some of them are structured like that. So as I said, related to tax and token distribution risk, offshore entities do not eliminate the risk, okay? It's a risk that you have to take into account if you proceed with that. And in relation with the governance and MiCA integrations, a DAO per se does not guarantee decentralization, okay? You need key features and components to be considered truly decentralized. I will get that in a minute. Yes, go ahead.
Can you truly decentralize a DAO from your point as a lawyer?
Can you truly decentralize a DAO? Yes, I think you can. Yes, I think you can. I think you can. But you have to fully follow certain principles and key features. The DAOs I know, none of them 100% truly decentralized. There are always points of centralization that could be considered for a regulator or a tax authority, right? None of them are perfect. But could you do that? Yes, could you do that? But it will be complicated, to be honest.
Is it a technical issue or?
It's a mix of technical issues plus governance issue plus control issue. Who has the voting powers? Who control the smart contract? Who has access to the multi-sig wallet, for instance? There are some features, the settlement layer. So, because at the end of the day, a DAO is sitting on top of a distributed ledger technology. So you need a fully decentralized blockchain, and on top of that, you need a fully decentralized organization, okay? So it's not an easy task from my point of view to reach full decentralization. Can be done? Probably yes. Has been done? I'm not aware of any that are truly 100% decentralized, right? All right, some considerations: token distribution and control token launches via AMMs may resemble unregistered securities offerings, for instance. Airdrops, if you control that, you can be avoiding risk, not 100%. On the tax planning and valuation, early token minting before accrual enhances tax efficiency, but again, you have to plan in advance, plan carefully, and execute better than you plan. And the importance of the early structuring, as I said, if you want to be truly decentralized since inception, by default, you have to be truly planning in advance how you're going to do. How you're going to do that, plus whether you really need it, okay? Because sometimes you don't need a DAO. You just need a corporation, normal corporation, LLC, LLP, whether it fits your needs. But not always. I mean, the DAOs at the end of the day are messy structures in terms of complexity. So the more complexity you add to a system, the most difficult is to control it, okay?
So, how do you actually measure decentralization? What is
that? I'm going to that in the next slide.
Okay.
Look, 5 key factors to measure decentralization. The settlement layer, governance part, the operation part, operation equal team plus technology, the user interfaces, whether you are using a user interface or not, over the related to the settlement layer, absent of decentralized control over the settlement layer, who is controlling that? Do they have sufficient or enough nodes and validator to be considered truly decentralized? That's a question that you have to ask yourself, yes?
As far as the selection process for those nodes or validators, is the way that they're selected, if this central entity chooses which ones are trusted, does that take away from the settlement layer being considered decentralized?
But are you asking whether there is a regulation or a regulator that assess that kind of things?
Well, no. Yeah, from like a regulator's perspective, if
that is a regulator's perspective when assessing that kind.
One entity saying, out of 100 validators, we trust these 34.
Yeah. If it's truly decentralized, having 5 validators or 100 validators. When you reach decentralization, you ask, Yeah, it's not an easy thing to do. They are not truly like specific numbers in terms of decentralization. They are not telling yet, like, if you have 100 validators all over the world, you can be considered truly decentralized. I think it's a matter, I mean, sometimes if you can justify that you have over, I don't know, if you're running 20 validators and you're just controlling one and the rest are spread among the users or the public, I think that you can truly think that the settlement layer is truly decentralized in that case. But again, they have to be assessed on a case-by-case basis. You cannot say like there is a standard, because some networks need just 20 validators to operate, another needs, I don't know, 100. Or it's better if you add more than X, Y, Z. If you are going above a certain threshold, let's say 50 or 100, is this better for the network? So the question is, when we reach truly decentralization, I don't have the answer. It's on a case-by-case basis, and these are just cumulative, all right? It's not just one thing. Okay, you can go for the settlement layer, but then you have to assess the architecture, the governance, the user interface, and the operations. If these different buckets, all of them are summing up, the result will be truly decentralized or not truly decentralized, okay? So all of them are cumulative. On the architecture, smart contracts should be open source, immutable, or upgradable via the centralized process. It's not that one single person holds the key to the upgrade, or two persons through multi-sig wallets. That's a sign of centralization, not decentralization, okay? As I said here, avoid centralization through limited signature multi-sig, centralized oracles, sequencers, all the moving parts in a blockchain. The more one single entity control them, the more centralized can be considered, all right? Most of the time it's like a matter of logic, but as I said, the logic have to be assessed on a case-by-case basis and take into account every one of the buckets. On the governance path, again, the DAOs should control decision-making. It's not that one single entity holds the power to make changes, to suggest upgrades. This is truly decentralized because all the members have equal vote, as yourself had. Emergency fusion, token distribution, at the end of the day, must avoid concentration. You know all that kind of project that said, no, I have a DAO, it is truly decentralized, but now I'm holding like 50% of the tokens that we issue. And we can change and mute and upgrade the blockchain of the DAO because we hold the majority of the voting power. And that happens. I think that happens overall initially when the DAOs starting to popping up some years ago. So a lot of people were holding like a lot of voting power through holding a lot of tokens. The user interface. Again, no single point of control over website or apps, because that means that one single entity control a key part of the decentralized autonomous organization. So you can point out it could be centralized. And for the operations, again, the operations should be governed or approved by the DAO itself, no for one single entity or one single team across the globe. Again, this one here. If you take into account the DAO, so the DAO at the end of the day have to perform anything. So when you are creating a DAO, you are creating a DAO for certain purposes. You are creating a DAO to issue a token, you are creating a DAO to create an AMM. The DAO is the vehicle, but the DAO have to perform anything, okay? So the more kind of services can be considered that are being performed by the DAO, the more risk you are facing. Here, if it's a legal person or other undertaking, marketing crypto asset regulation basically states that any legal person or undertaking that is in the legal businesses, is making businesses, is transacting, is providing services, could risk to be under the MiCA umbrella. Undertaking could be anything. Undertaking is not defined in the law, it's defined by case law through different court rulings across the European Union. But as a summary, undertaking could be an association, a foundation, even a natural person, a physical person such as you. Okay, so no one is exempt to be considered as an undertaking. Undertaking is like a concept that includes a lot of sub-concepts inside. What else? As I said, acting by way of occupation of business, systematic, continuous, revenue generating, not incidental, no one-offs. Okay, if you are doing that on a constant basis, you are risking to be considered under the MiCA umbrella. Provision of one or more crypto asset services. Remember that we were talking about bridging. We were talking before about AMMs, where they could be considered units in a collective investment. Some of the AMMs could be considered cross-chain swap bridges. For instance, if there is a trigger that includes exchange of crypto for funds, which there are a lot of AMMs that perform that kind of function. If you have DEX aggregator, the service could be considered reception and transmission of orders. I don't know if you're familiar with that kind of services, but that kind of services resembles what can be performed by a broker, basically. In the traditional finance, we have two figures. When we talk about trading, you have the broker that normally acts as an agent, reception and transmission of orders. So operating on behalf of the client, not on its own account. And then you have the trading platform, which is the exchange in our case, which is operating on our own account, meaning that they are the ones that execute the order received from the broker. Broker, exchange. One receive and transmit orders, the other one execute the orders and give to the broker back. What is targeting EU clients? We talked about this before in the previous talk. Actively targeting people in a certain territory. There are signs, there are red flags that you are performing certain services within a certain territory, and you probably or you potentially could be under the MiCA umbrella. Another one on a professional basis. This is related by the way of occupation of business. Organized, repeatable, revenue generating protocol. So the European Security and Markets Authority, which is the authority for MiCA and for the Financial Instrument Directive to enforce that, tells in a guidelines or legal opinion, is not legally binding, but these are plain guidelines. But when the European Security and Markets Authority recommends something through guidelines, you better follow, okay? Because most of the national regulators are going to follow the guidelines and they are going to enforce it based on interpretation. So if no single entity governs the technology, if no single entity provides essential services to maintain or operate the protocol, if there is no identifiable person that controls key functions of the decentralized autonomous organization, if the governance power are sufficiently decentralized, you are probably facing a truly decentralized autonomous organization. That is difficult based on what I mentioned before, these 5 elements. It is difficult to reach, and none of them, the ones I know, the most common, Uniswap, there are some of them, but the most known probably are Uniswap, Aave, I don't know if Ethereum sometimes. Ethereum has a foundation, but I think they didn't have a DAO. They did have a DAO, right? Anyways, consider that. Yeah, I talk about that. That's it on decentralized autonomous organizations. Do you have any questions?
thing here goes, where is the DAO? We were talking, which government is going to
enforce?
Regulate a DAO, and why?
I mean, it's not, the concept is not regulated at all. It's regulated an operator that is performing regulated services. So when you are trying to perform services that are regulated in an unregulated manner, a regulator can come to you, find you, follow you, and make you comply with the law, or otherwise run out of business. It is the same when they, a government or an enforcement action can go to the telecom company and said, block this IP. And you cannot transact, in central countries because you are using, at the end of the day, the best layer is the telecommunication layers. If they cut it at the beginning, you cannot perform any services through the internet. Or you should use another means, I don't know, satellite or whatever. I'm not a telecom guy. But yeah, they can enforce it. It's not that they are going to chase, how you chase a decentralized autonomous organization is that if the decentralized autonomous organization is performing services without being duly authorized, it can be pursued, can be prosecuted. Any questions? No?
I guess one thing that, and this is open to anyone, that I struggle with and get confused by is it seems to me that almost any organization begins with a single idea, that's generated by one or a very small number of people. So within a DAO, is there kind of the assumption from a regulatory perspective that this is something that's going to start out, maybe with less people involved, but as long as it evolves into something where there is, those elements of decentralization, right? I guess what I'm asking, are they looking at that initial formation phase, or are they looking at where you're at today kind of a thing?
I mean, I think cases where, some people are starting as a DAO and they evolve and they get regulated. They created a company, they adopt the DAO and they get regulated because, depending on where you are sitting at, things can be complicated in terms of when you are evolving, you are making money, and having a DAO does not imply that you don't have to comply certain obligations. Imagine 4 people here distributed across the European Union. At the end of the day, you have to pay taxes. You have to justify where that income comes from. So they're going to ask questions if they don't understand the source of revenue. Where do you get that revenue? Through a decentralized autonomous organization. Oh, really? What is that? How does it work? Oh, it looks to me like an incorporated entity. It looks to me like a limited liability partnership. So it's not that hard that you get caught if you are not performing correctly or if you are not following the principle of truly decentralization. I mean, at the end of the day, if they want to, the tax authorities are probably the most, efficient authorities across the globe because they are managing, they are chasing money. So when you are chasing money, you put money into chasing money, okay? So it's not that difficult. For instance, in Spain, there is a saying because it's a fact. It's like no one can avoid taxes. So sooner or later, you're going to be investigated, and if you avoid taxes, whether it's 10 euros or 10,000 euros, you're going to get caught, and you're going to have to pay your avoidance taxes plus the fine. Sooner or later, and this is, I think. And they do that for 2 reasons. First of all, money, and the second one is as a way of warning for the rest of people that are thinking to do that kind of things. Of course, there will always be like money laundering and that kind of, illegal or blurry activities. But the technology is evolving rapidly. Tax enforcement agencies are using AI now. They are crossing data, but big chunks of data. Like from, imagine if you transact with 10 banks and 10 exchanges across the globe, they are crossing data. They know everything. And they are putting money into that. So I think that if you want to to create a DAO, you better be sure that you really want your project to be truly decentralized and design that accordingly. It's not like I'm going to create a DAO to avoid certain regulations. Say, I'm going to create a DAO because my project is truly decentralized and I can do that in a compliance manner, like avoiding certain threshold, respecting certain buckets, the settlement layer, the governance layer, the operational layer, the interface layer, just to make sure that you are not committing something illegal. And that's it.
Just out of curiosity, does anybody in this room have a strong example of a DAO that meets all of those?
Is Evernote quite good?
No, I don't know. That's what I asked. I'm not super
I would actually step one way back. A lot of what you said out there is actually the description of what a decentralized network itself is.
Yeah.
Not an organization, but the blockchain itself.
Yeah.
Right? So if you look at it, that's pretty much the description of the blockchain itself, right? Because it has the governance, it has everything. So my question is the blockchain itself a DAO?
No, it's not. It's not, because at the end of the day, well, if you take into account that the blockchain is just a technology layer, they are only rails. They are not performing anything beyond granting a layer of technology on rails.
There are validators on it, there are participants.
What about voting on features and things like that?
Yes.
What gets activated on the network?
Yes, but who is? If you have centralized part, you could be inside this.
No, there is no.
There is no centralized part.
Yeah, there is.
So you don't have to worry.
Yeah. So,
because
my question is, is a blockchain itself pretty analogous to a DAO? Because there are.
I mean, they share common. Yeah, they share common elements. They share common elements, of course. And in that case, if you eliminate the DAO from the equation and you take only the technology, so it would be the same approach. It's like, are you trying to decentralize or pretend to be decentralized when you are not? Why are you pretending to be decentralized when you are not? And at the end of the day, they could be facing the same things. They could be facing tax regulation. They could be facing corporate regulations. They could be facing market of crypto assets or another type of crypto asset regulations. If they are under the bucket of the services or the structures that they cover, yes, they could face the same fate in terms of sanctions, etc. Yep.
I mean, to me, this highlights the importance of more like a comment for folks in the room, the ongoing conversation about, do we need a default UNL? What other options are available to prevent civil attacks and so forth?
Yeah, those are technical. Yeah, those are issues which will always be there.
Yeah.
The question is that, of course, why do you need a DAO? That is the very.
Yeah, it's the first question.
Yeah, it's the first question. Yeah, but what if there is no DAO which is controlling, decentralized or not, but there is a DAO which is a part, which is part of a governance structure of a blockchain, only a small part or a part of it. How does that work?
In terms of control and participation, we should assess here how much control power has that kind of DAO over the decentralized or the distributed ledger technology. Is it able to make changes, to make upgrades? Is it able to stop the smart contract on the blockchain or the blockchain itself? What kind of capacities does it have that DAO? You have to assess, at the end of the day, it's like, what is the power that you have to manipulate the underlying technology? Okay, because imagine if we have, 50 DAOs plus 1 million users, and everyone is having his fair share in controlling one blockchain, that's not a problem. The problem comes with the control. Who can control that? Who can stop the technology? Who can modify the technology? Who has the voting power? Who has the rights? Who is controlling the interface? Who can control the token issuance, if you have one? How you can control the technology is the question that we should be making.
Yeah, we need like a unit of centralization, like you know, you have like units of temperature.
Yeah, units of centralization. Yeah, that's correct. And it's a measure.
What is that though? It's such a hazy.
Yeah, I mean it's an abstract concept.
From, oh, it's cold to, oh, you just got burned. You know, there's got to be
yeah. Where is I mean the question is where is the line?
Yeah,
okay.
so
I mean in that kind of a structure, there's no 0, 1. Probably most of them fall under a gray area. So you have to be able to justify that you are falling into the decentralization bucket or not. But the more elements you have in your favor to be able to justify that you are fully decentralized, the better. And of course, you will face blue lines. You will have to navigate margins. But the more you structure your entity to be truly decentralized, if you want to move ahead with your DAO, the better.
So the truly then, there is no real numeric value to the truly.
No, could be.
Yeah, the whole thing is fundamentally has like a subjective.
Yeah, it's subjective. It's subjective, and it will always depend on the local regulator's interpretation.
Yeah, exactly.
There will be, I mean, you probably have some things that are pretty clear, some things that are pretty clear in both sides, the side of centralization and the side of decentralization, and some that are like a gray areas and are subject to interpretation from your side and from your regulator side. And it happens all the time. It happens with the exchange back then. Probably your interpretation is not the same as your regulator interpretation, but at the end of the day, the enforcer are them. The one that are backed by a national state that have an army are them. So even if you consider, I mean, at the beginning, when I say at the beginning, 5 years ago, 8 years ago, a lot of it changed normally, like for against the regulatory issues or against regulator going to court, and the courts kill them basically in terms of, look, a regulatory authority, a regulator, a local regulator already tell you, look, you are not complying with X, Y, Z. And you are coming here and we are not give you the right because the regulation and the interpretation, there's room for interpretation and our local regulator interprets X, Y, Z. So you have to follow that because there's room for interpretation and you are not interpreting the law. We are regulators, the one interpreting the law. You can navigate and fight back, but my advice is try not to fight back very often with regulators.
Get it right.
Yeah, get it right by default and try to avoid, because it's time consuming, it's money consuming, and it's not a good strategy if you want to continue providing services in certain territory. So you better understand regulators and know how to deal with them, and it's difficult.
How much do regulators consider your intentions in all of this? It seems like they probably wouldn't care that much if your intention is more towards being a decentralized organization, but maybe you don't meet all of those elements.
Then do you need the decentralized
Yeah.
Yeah. No, I mean, I have a hard time envisioning.
No, because they have their, their acid test of what is the thing. So if you don't match that, then they say you're not a DAO. They don't. It's not a touchy. They don't have touchy feely. Oh, Scott tried. You know, I don't think the regulators work that way. I think there are no good points for participation. Right? So,
I mean, from my experience and in relation to regulators, there are some times that the interpretation is not 100% correct, but they go very deep in the investigations, in the sense of they are like kind of auditors of the law, and they interpret every single detail, and they request information, they request more information, and they can be slow, but they will get there with all the details. Trust me.
Horacio, in Wyoming, they have a law. I haven't looked into it in detail. They have a law on what a DAO needs to be. So that's an interesting one. Then you get the set of rules to do a DAO legally. Have you had any experience with a DAO? Or?
Yeah, I have about that, but I'm not familiar on how they are structured or how they work slow for that. I will take a look at that because, I mean, there is differences. I mean, I'm saying there's differences because they are. We are using different types of legal structures in the sense they are using common law and we are using continental law. So the common law in the United States, in another common law jurisdictions such as Canada, Australia, Japan, etc., they are using more a case law. And here in Europe, we are using more a regulatory approach, like law, regulations, guidelines, etc. So I can imagine that they probably are resembling DAOs to some kind of less regulated type of limited liability company. They have to comply with certain regulations. Yeah, you identify the people behind that.
Like federal tax law, though, in the United States, because Wyoming can say this is a decentralized organization.
No, but in the context of European Union, you come back to targeting EU clients then.
Yeah.
It has no bearing on where you are incorporated because this takes precedence over that.
Yeah.
So
I can't wrap my head around.
So place of incorporation has no bearing in the context of MiCA and this regulation.
Yeah. I mean, at the end of the day, I recommend that if you are thinking about creating a DAO, better before than after, you check that with lawyer, tax advisor, etc. I mean, I understand that beforehand could be very difficult because it's money that you have to, get in advance and pay them. But as soon as you are starting to get traction, go to a team of lawyers, team of advisor, and get the things right, because you're going to save not only time and money, headaches, and that kind of things that sometimes could get you or stay up in the night.
Is it reasonably easy to find the law practice that has the expertise? I mean, because it seems like a lot of this is pretty novel. I mean, you get, of course, is a little bit more.
Yeah, there are. I think I only one lawyer in the European Union that is pretty familiar with that kind of structures.
Right here.
I'm not super familiar with that structure because first and foremost, there is not such, there is not a common structure, and there are not so many. And if you take into account that probably a small percentage of them have ever checked with a lawyer, so we only have, I don't know, a small percentage left. But I do know that some of them, such as MiCA DAO, went to that lawyer, this lawyer that I'm mentioning, and they get it right.
Nice.
Yeah, but it's not a common practice. I'm a lawyer.
What did you say the name of the DAO was that went to the lawyer?
MiCA DAO.
Oh, Maker.
Yeah, MiCA DAO. Yep.
It's what?
Yep.
Great. Okay. Thanks, Horacio.
Thank you.
Thank you once again. Anybody who wants to trouble him, better do so today because he's leaving tomorrow.